Good morning. Good morning. How's everybody doing? Good morning. Good morning. Happy Sunday, first webinar of 2025. Let's do this thing. We're going to jump straight into it. Today, we're going over how to correctly use SMT. We're also going to go over the economic calendar, how I trade around the economic calendar, which days I like to trade the most, which days I tend to avoid, and we're also going to do a quick little weekly review. I really want to cover knowing when Tremaine's model, will not pan out, meaning when, or let me say, how do you know when price is not likely to reach that midnight open? How do you know that price is going to continue away from the midnight open? This week I took 2 or 3 trades, all of them going away from the midnight open instead of targeting it. And I got a lot of comments. Why did you buy if you're above the midnight open? Why did you sell if you're beneath the midnight open? Aren't we supposed to go higher? How did you not know we're going higher? We're going to talk about that, okay? And that should be it. We should be out of here in an hour. For those who are new, these usually last about an hour. They are saved. They are recorded. It is recommended that you tune in live to watch these live. That way you can ask questions. I do read the chat and I do answer questions. Sometimes if we have an extra 10, 15 minutes towards the end of the webinar, we'll just answer a bunch of questions. So try to tune in live if you can. If not, because of personal reasons, I absolutely understand. They are recorded and saved and uploaded in the webinar channel. So real quick, firstly, what we're going to go over is knowing when price is not likely to gravitate down towards the midnight open or back up towards the midnight open. So for starters, that all starts off with the daily chart. I got a lot of comments on my last video because we took that short on Friday, and a lot of people are saying we were beneath the midnight open. Why did you take a short? If we look at the weekly forecast, this was our focus, the sell side, all week. I am bearish on the week. Weekly chart, daily chart rules over everything. If I have to choose between a higher time frame draw, like the daily sell side here, or the midnight open, I'm opting for the sell side every single time. This was our focus. Daily chart is bearish. We talked about how we don't want to see this high taken out. We like the equal lows. That was our focus. So if we're only, 100, 200 handles away from that price level, I don't care if we're 300 handles beneath the midnight open on that day. I'm looking for lower prices because this was our focus to begin with. The daily chart is going to gravitate towards levels of sell side, liquidity, or inefficiencies. So now with that in mind, and let's not forget that we are bearish on the daily chart. We're expecting lower prices, meaning every day I get to the charts, Monday, Tuesday, Wednesday, Thursday, Friday, I'm expecting the daily chart to do something to take us towards this level. And here you see Monday, we have a bullish day. That's fine. We're trading up into a fair value gap and a bearish order block. And then here, Tuesday, bearish on the day. Wednesday, we have a down close. Thursday was a holiday, still a down close. And then Friday, we took that short, targeting sell side. So I don't care, if we're beneath the midnight open. If everything is in the chart that says the daily is likely to take us lower during that session, I'm looking for shorts. So keep that in mind. We're looking for lower prices, on the daily chart. Our bias is bearish. Now, let's drop down to a 15-minute chart, and we're just going to work through the week. So here's Monday, Our midnight opening price is here. Just about. Let's see. And we're not going to do the 8:30. We're going to focus on the midnight. So here, I'm telling myself, I'm bearish on the daily chart. Preferably, I like something going short. And if those who remember this day, we didn't take any trades here, wasn't interested in anything in this. It was just kind of real lethargic, real just kind of slow. And then we actually did get a clean sell-off later during lunch. And this is what we were looking for, So in my opinion, Monday was more of a no trade day, consolidating, a lot of wicks. There's barely any fair value gaps at all this morning. And then later during lunch, the PM session finally rotates lower And for those who remember the stream, I was much more confident looking for shorts on this day because the midnight opening price was all the way down here. I wanted to participate in a move, something like this. This I'm skipping out on. Okay, so that was Monday, kind of a choppy day. I'm not placing a lot of emphasis on that. Let's go back to the 15-minute chart. Let's look at Tuesday's price action. Tuesday through Friday was really the main attraction here. So here's Tuesday, perfect example. Perfect example. Everybody on YouTube and Discord who aren't full access members always ask me, why did you sell beneath the midnight open? Your model says, for those who are tuning into the webinar or watching this later, this is going to clear up all those questions. So here we go. Midnight opening price is here, give or take. We break down. All right, what do? We rallied up above the midnight open, clearing out buy side. See these highs? These equal highs, too smooth. These equal highs here, too smooth. We rally up above the midnight open, clearing out the buy side, break down with a lot of speed, this displacement fair value gap. I want to see that stay open. But Tremaine, aren't you looking for buys because we're beneath the midnight open? Well, where's our focus on the daily chart? Down here. So why would I want to look for buys if we've already taken out buy side? Okay, we rallied up above the midnight open, which is short-term premium. Okay, we break down with the breakaway gap with a lot of speed. I don't want to go long. I don't care if we're beneath the midnight open, okay, on this day, because for one, the daily chart rules over everything. I'm already bearish on the daily. So if I see buy side taken with the displacement lower, that's perfect. That's exactly what I want to see regardless where the midnight opening price is, because the daily chart holds more strength. I want to see this fair value gap stay open. I don't even want to see us trade to it. I want to see us work lower. So let's look at this price action on a 1-minute chart. All right, here we go. And for those who remember, we actually took this short on the stream. So we cleared out the buy side. All right, we break down, fair value gap. Awesome. I want to see that stay open. And you heard me mention that in the stream. That is a breakaway gap. That's a lot of speed. That's energetic. It's a breakaway gap in the direction of our daily bias. We're looking for sell side, okay, on the daily chart. So Tuesday is already setting up shorts to gravitate towards that level. Perfect. I want to see that fair value gap stay open. That's really bearish if it does. This is the fair value gap that I like to see take us lower. And this is why I took it as an entry. And a lot of people have said, well, Tremaine, aren't you chasing price? Like you're selling down here. Isn't that chasing? No, it's not chasing. The logic is this fair value gap should not even be traded to. That's not chasing price, okay? The entry is coming just, 3 minutes after 10 o'clock. Doesn't revisit the fair value gap entry here. Okay, we took partials all throughout here. Trades up, stops me out in profit. You get a nice sell-off until what, 10:50 to 11:10 macro. What does that bring? A classic retracement or reversal. That's why I say 11 a.m. is always profit-taking hour. Okay, if you're in a short, once you get closer to 11 a.m. or really that 10:50 macro, you want to start scaling out because that retracement is coming, okay? So that is the reasoning why I took this short and I wasn't looking to buy this fair value gap. Okay, a lot of people were looking for something like this. And there's two main reasons why this fair value gap is not valid. Or you have a bullish breaker, right? Low, high, lower low, okay? I'm sure people were trying to buy this. For one, all right, if we're already selling off heavy like this, I'm not expecting a retracement higher until we get to the London close macro, which is 10:50 to 11:10. So in my mind, I'm telling myself it's not time to go higher yet. We still have more work to do on the downside. Okay, that's one reason why I don't trust these entries as longs. Two, we're looking for this down here on the daily chart, right? This is our focus. You have to keep this in the back of your mind whenever you're trading these lower time frames, okay? The daily chart is gravitating. It's like a magnet. It's headed towards these levels. So don't get tripped up on the 1-minute chart trying to go long here. But Tremaine, the midnight opening price is here. We're bearish on the daily chart. I'm going short here. I don't care about the bullish breaker. I don't care about this fair value gap. I want to see us run through that, make lower lows because we're headed towards the sell side on the daily. All right, let's go to Wednesday's trading. So let's get out of replay mode. Let's find Wednesday, which is this day here. I think, oh, this was the nasty day here. This was nasty. All right, midnight open. Did I take off the sell side level? Oh, I did. Right there. All right, so midnight opening price. Here's Wednesday's trading. Remember, our focus is down here. Let's go to a 1 minute chart because this is looking messy. All right, this is a no trade day for me, which is why we didn't trade it. Okay, consolidation all throughout here. Okay, this is an example where price did return back to the midnight open, clearing out the buy side, and then you get the shorts that you wanted. Okay, in this example here, if you're comfortable trading something like this, this is where the model pans out. You have relative equal lows, fair value gap, order block, and I highlighted this London close macro sell side run. Okay, 1050 to 1110, expect a retracement or a short-term low taken out before continuation. That low is taken out there. Trade up, buy side, hanging around the midnight open. Smart money accumulate shorts and then rotate lower. This is the real move that I like to participate in because we're bearish on the daily chart. All right, but this was a no trade day for me because it's just not the cleanest. I avoid stuff like that. All right. And Thursday was a holiday, so I don't care about Thursday's price action. We didn't have a morning session on Thursday. And another great example here with Friday's trading. Wrong tool. All right, same thing. Focus is down here. We're looking for daily sell side. That's been our focus all week. Every single day we get to the chart, we're keeping in the back of my mind that sell side is the draw. What do? Same thing as we talked about, I believe, was it Monday or I think it was Tuesday? Midnight open, we trade up. What did we just do? Look at all these highs. We have like a quadruple top here. All right, we trade up, we clear out all the buy side. Break down, trade up, order block, small little details. This stuff is so important. We have a fair value gap here, a bearish fair value gap after clearing out equal highs. Trade down, trade up. Do we trade to this inefficiency? No. That fair value gap stays open. Private mentorship, we just covered this for those who are watching in group 1. We just covered this in the first lecture, okay? Identifying low resistance liquidity runs. We trade up, that fair value gap staying open is telling you that we're bearish, okay? We don't start trading, or I don't start trading until 9:30. But if I see all this information prior to 9:30, I don't care if we're beneath the midnight open. I'm looking for lower prices. 1, because we're already bearish on the daily chart. But 2, we've already done all the damage and algorithmic signatures up here. We've traded above the midnight open. That is a premium. We've cleared out all these equal highs. Okay, we've already knocked out traders holding short positions. Okay, where are they trailing their stops? Here, 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 above these highs. So we've already knocked out everybody who is holding their shorts from all this down here. All right, we break down, leaving a fair value gap. We trade up to it. NASDAQ doesn't even have a willingness to reach the fair value gap, not even the low of it. It leaves this entire range open, then breaks lower. Look at that speed. Okay, breaks lower. That's bearish. That is bearish. I don't care if we're beneath the midnight open. I'm not looking to long anything in here. Let's go ahead and jump down to a 1 minute chart. All right. This is like the exact same entry we took on Tuesday. Here. All right, so a lot of people are saying, why did you sell? Tremaine, look where we are. Aren't you looking for longs because we're beneath the midnight open? Our focus is down here. At this point in time, when this fair value gap formed, we're only barely 100 handles away. I'm definitely looking for lower prices, even though the midnight opening is all the way up here. Now, once we take out that midnight opening, or once we take out the sell side, then I'll be observing to see if NASDAQ wants to reach for the midnight open because our targets were already reached. Okay, it gives you a short-lived rally, clearing out buy side, and then works lower towards the sell side again. But this is why I'm opting for shorts. Okay, fair value gap, breakaway gap. That should stay open. This is the fair value gap that should take us higher. Same stop loss placement as Tuesday's trade, above midpoint of this fair value gap. Because ideally, you don't want to see this traded to at all. But if it does trade into it like it does here, it needs to be a small little wick like an institutional order flow entry drill. Bang, and then work lower. And then we had medium impact 10 o'clock news. All right. So that's kind of how you know when to expect when price is likely to continue away from the midnight open. Okay. Buy side taken, fair value gap staying open, displacement fair value gap in the direction of our daily objective. I'm looking for lower prices regardless of where that midnight opening price is. Hopefully that made sense. Whew. All right. Any questions? I'll take a couple minutes, look at the chat before we move on to SMT. The indicator is posted in the FAQ channel in the Discord. Take a look at it. Daily bias. I gotta make a whole YouTube video on that. I have a YouTube video scheduled for Thursday. If you look at the monthly calendar, I may talk about daily bias there. How do you feel about this 3 jives pattern on the daily chart? I still like lower prices. I like this sell side. And the weekly chart still looks really bearish. Weekly chart weighs over the daily chart. So I still favor this sell side. Will we get it? I don't know, but that's what I prefer. And still, like, this is all stuff that I factor in. Let's get out of this. Excuse me. All right, here's Treasury bonds. Look how bearish Treasury bonds is. Treasury bonds and NASDAQ moves together. Okay, I'm looking for sell side. Okay, new lower lows for Treasury bonds. Daily chart. Nothing in the daily chart says bearishness. Let's look at dollar index. Look at dollar. My voice cracking. Look at dollar index. Does dollar look bearish at all? In my opinion, it does not. So if dollar is looking bullish, I want to see lower prices in NASDAQ. If dollar is looking bearish, I want to see higher prices in NASDAQ. So we have a higher dollar, meaning I prefer to see a lower NASDAQ. We have lower Treasury bonds, which moves together with the NASDAQ. So I want to see lower prices in NASDAQ as well. And then you have the seasonal tendency of January, which is bearish. Usually in January, you see lower prices. And here's NASDAQ. So far, we're getting lower prices in January. So I'm still bearish, looking for sell side. Those are all things that go into daily bias. A lot of people ask me about daily bias. I factor all those in. Treasury bonds. Voice is cracking, my goodness. I focus on Treasury bonds, dollar index, seasonal tendencies. I factor all that stuff into daily bias, which is why, okay, even though we've taken out sell side, rallied up, I said I'm still looking for lower prices. I'm not looking at this down close candle to send us higher. I'm not looking at this volume balance to send us higher. I'm not looking at this order block here to send us higher. Okay, seasonal tendency is bearish. All the other markets, okay, are saying NASDAQ is still likely to go lower, which is why last week we had all sell days, except for Mondays, trading into a premium. Thank you, Unicorn Queen. Indicator is in the FAQ channel in Discord, frequently asked questions channel. I took an entry on the initial tap. There's a D wait for confirmation candle. No, I don't need confirmation. Some people do that, like for instance, but I mean, I don't need confirmation. Like for instance, let's look at what was it, Tuesday's trade here. Like some people may be scared to short this because they feel like they're chasing price. They see this up close candle here, they think it's bullish. They see this up close candle, it trades down, trades all the way up. Okay, they may wait for price to run away. Okay, now I'm going short. But you're exposing yourself to more risk. So I just want to get in. As soon as price taps below that fair value gap, my stop loss is going above midpoint of this fair value gap. I want to go short right there. I don't want to wait till NASDAQ starts leaving. Okay, now I'm short. Now I trust it. You just opened yourself up to more risk. So I don't need more confirmation. My mindset is if the markets are truly algorithmic and it's already coded to go lower, then I'm just going to get in right there and just trust it and manage your risk. If we're above midnight open, whenever we open, that's when your model will play out. So it's a narrative. My model plays out best if, like, let's say, and then we're going to move on after this. We have about 40 minutes. I have 2 more topics to cover, SMT and the economic calendar. But we'll just do a hypothetical example. Let's say, for instance, the midnight opening price was down here. It's really up here, but let's say it's down here. Okay, playing devil's advocate. All right, that's supercharged because one, okay, again, this is all just hypothetical for an example. These are real bread and butter setups right here. All right, let's do something like this. Okay, so let's say our midnight opening price is all the way down here and that daily sell side is down here. Well, that's more confluence because I'm already looking for lower prices on the daily chart and I love targeting the midnight open. So if I could take a short, a tier 1 setup, okay, take a partial at the midnight open and then leave a runner for the daily sell side, that's ideal. But there's nothing wrong with me taking a short here with the midnight opening price here. Okay, I would just use half risk. If you notice the trades I've taken away from the midnight open, I've used fewer contracts, 3, 4, 5 contracts. I haven't traded with 10 contracts yet this year because I haven't traded Tremaine's model yet this year. I got caught in that short-lived with rigor. My new high time drops. Yeah, just be more patient and just trusting the daily chart is going to go where it's likely to go. But let's get off of this now. Next, we're going to cover SMT. So I get a lot of questions about SMT. Do you use SMT in your analysis? Are you even looking at it? When do you look at it? And I see a lot of people, a lot of people using SMT wrong. They're looking at every single short-term high, short-term low, and they're getting caught up in fake rallies, fake SMT divergences. Okay, so let me lay the groundwork first. SMT is only important at key levels. That's rule number 1. That's the golden rule. And by key levels, I mean anything on a 15-minute chart or higher. 15-minute chart, hourly chart, daily chart, weekly chart. Okay, SMT levels are only important if you're at a key level. Okay, I don't care about NASDAQ making a lower low and S&P making a higher low. If my key level hasn't been reached yet, I don't care. So keep that in the back of your mind. I'm only looking at SMT once we trade to a key level. What does that mean? Well, we have here NASDAQ on the left, S&P on the right. We have the morning session highlighted, 9:30 to 11:30. So here, a lot of people may get caught up going long, let's say, and this was a daily sell side level, 20,993 daily chart. That's that same low, I believe. It's just anchored to this right here. Okay, so that's that same sell side, 20,993. I just have it for visual purposes, okay, with the trend line starting here. So a lot of people, they're gonna get caught up, okay, if this is our focus for lower prices, I don't care about any bullish SMT until we get that sell side. So what happens is a lot of people will do this. Let's drop down to a 1-minute chart. And if I can't find an example, then it is what it is, but they'll say, let's see if I can find something. Or you know what, we're just gonna draw it. Sell side down here is our focus. A lot of times what will happen is we'll be trading down towards sell side, we'll stop, we'll retrace a little bit, NASDAQ will form a lower low, retrace a little bit, and then, I don't like that drawing. It would do something like this, all right? And then S&P on the other hand will be doing the same thing, drops down, forms a low, comes up, fails to make a lower low, and comes down here. This is where the trap comes in. Remember, our focus is the daily sell side. That is our draw. We are looking for that level to be tagged. NASDAQ trades down, forms a low, trades up, forms a lower low. A lot of people will say, oh, look at that. We have SMT here. We have SMT, we're going higher. We haven't reached a key level. Our focus, our draw is down here. And this is where a lot of people get tripped up because they're trying to buy something like this and take it higher just because we made a lower low on the 1-minute chart here and S&P hasn't. I don't care about this SMT. I want to see us trade here. Now, once we trade here, now I'm looking to see if we have SMT. Now I'm comparing the lows because I've already seen my objective tag. So NASDAQ would just do that, run over the top of that SMT. S&P would do the same thing. And then people would be like, what just happened? The SMT failed. No, we're just aiming for lower prices on the daily chart. You're lacking narrative. So let's clear this off. All right, small little SMT here. Let's take this off for a second. Once we tag the daily sell side on this candle here, once we tag it, I'm saying, okay, now I want to see if there's SMT with S&P or the Dow, whatever market I'm comparing. This low here and this low. Lower low, higher low. We have a lower low, lower low. All right, so yeah, small little SMT there. That's something, even though it's a 1 minute chart, the narrative is we've already taken out sell side on the daily chart. I'm looking at that. On a wider 5 minute scale. Okay, this is the SMT that I'm looking at here. Low, NASDAQ makes a higher low. We have a low here, and S&P makes a lower low. I'm caring about this SMT. Why? Because we've already tagged daily sell side. Okay, you need that narrative. I have a lot more examples here. This is a day where you could just easily get thrown around. Another rule when it comes to SMT, and I see this a lot in the live streams, I don't care about SMT on days like this. Okay, days where it's just choppy consolidation. You know how easy it is to get confused with SMT on a day like this because we're forming so many highs, so many lows. It's no. Okay, just no, because NASDAQ can easily form a higher high here. S&P can form a lower low, and you'll just get chopped and thrown all around. So a lot of people, I'll be in the streams, I'm sitting back because this is just consolidation. I'm not really interested in it. So I'm sitting back, relaxing. They'll say, are you not looking at the SMT here? What about the SMT here? Oh, look, SMT here. We have some SMT here, SMT here. And it's like, wherever we're range bound, I don't care about SMT because, one, we're not trading at a key level where I'm expecting a reversal. But two, okay, NASDAQ is just forming so many highs, so many lows, and each of those highs and lows are being taken out. So if you're trying to trade SMT in a tight range consolidation like this, you're going to get burned. Okay? You're going to get burned. Let's see. I have some more here. Okay, this is just another day. Hypothetically, let's say we're aiming for a level down here. I don't care about any bullish SMT here. I don't care about it. Let's see if there's anything on a 1 minute chart. Let's see. All right, so hypothetically, like small, I'm not even looking at this, but let's say somebody is this low here. NASDAQ made a lower low. S&P temporarily made a higher low. I don't even care about that because let's say our focus is a sell side level or a new week opening gap, or we're aiming for a midnight open, whatever the case may be. I don't care about the lower lows and higher lows here until we get to this level. Now, once we get to this level, now let's look for SMT, okay, because we're trading at a key level. If we're not trading at a key level, SMT does not matter. It does not matter. So I'm not looking at anything here. I don't care about any high, any lower lows. I'm not looking at anything here. I want to get to here first. I have a few more examples of this. It's really brief, but a lot of people get tripped up. Okay, I have something here. All right, here's a 1 minute chart. This is an example of good SMT. This is what I like to look for. Now, NASDAQ makes a higher high. This is going to be our last example. NASDAQ makes a higher high. S&P makes a lower high. What makes this SMT valid? How do you trust this SMT compared to the other ones we saw previously? Well, let's take a look. I'm going to draw a horizontal array at this high, and I'm going to take us to the daily chart just to see what level we're trading into. So let's do that now. Make sure I'm in replay mode. All right, let's clear this off. Clear this off. All right, so that SMT high was formed right here. What do we have on that blue line? Well, right away, We have an old new day opening gap here. Okay, I see a new week opening gap or new day opening gap here. Between that candle's closed, this candle's open. Let's go to a weekly chart. All right, and a new week opening gap here, but I'm gonna keep that off. Let's go back to a 1 minute chart. Now this tells us a whole lot more narrative. Okay, what am I seeing here? We have this upper new day opening gap. Look at the body staying inside the new week opening gap. Okay, S&P I'm sure has key levels up here as well, but for the sake of saving time, we're only going to focus on NASDAQ. This is a new day opening gap as well. Does NASDAQ even have the willingness to reach that new day opening gap? No, it can't even close outside of this one here. We form a higher high, S&P doesn't. Okay, we trade down, form a short-term low, consolidate, trade down again, forming that low there. All right, I actually took this short on micros. Okay, I shorted this fair value gap. Actually, no, it was a 1 minute contract. I shorted this here. It's in the My Trades channel, and this was the logic right here. Shorting here, targeting sell side, equal lows. So because NASDAQ is trading at a key level, I'm trusting this SMT. I'm looking at higher highs, especially if we'll say we have daily sell side down here. That's our focus for the week. We're already expecting lower prices for the week. Well, I'm not really interested in longs since we have a daily key level down here. And now you're throwing SMT on top of that while trading into a new day opening gap, while NASDAQ is showing an unwillingness to trade to this upper one here. And you have a market structure shift taking out this low. And you have a breakaway fair value gap that you want to see stay open. I trust that short because you have all those factors behind you. And that's why I took it. All right, so there's SMT. Quick summary. SMT only matters at key levels. What is that? A new day opening gap, new week opening gap, a 15-minute relative equal high or low, daily sell side, daily inefficiencies. Those are key levels. In this instance, in this example here, which is a beautiful example, okay, we're trading into a new day opening gap. That's our key level. Breaks down. What time we got? We got 30 minutes. We're good on time. All right, let me read the chat for a bit. January 8th was January 8th Seek and Destroy. January 8th was that Wednesday. I think the first half of the morning session was, I'm already 1 minute chart. I think all this here is Seek and Destroy. And then we get to 10:30 and it cleans up a little bit as we head into London close. But all this really from, what is that, 8 a.m. all the way to, we'll just call it 10:30. All of this, every high taken out, every low taken out, high, taken out, low taken out, equal highs taken, lows taken. All of this here, I consider this Seek and Destroy, or you could just call it a classic consolidation. And then cleans up a little bit, rallies higher, taking out the buy side. But even this run higher, taking out buy side, and I shared this on Twitter, it's really hard to participate in a long here if you're targeting buy side. It's really hard to hold a position and not get knocked out unless you get an entry, down here somewhere, because entry, deep retracement, another deep retracement, taking out this low, okay, consolidation, you get another deep retracement, completely overlapping this fair value gap. So, I mean, yes, it cleans up a little bit after 10:30, but in my opinion, this is just high resistance, and then this is just consolidation / Seek and Destroy. SMT applies to the body of the candles. Yes, it does, because wicks are just small piece of price action. The bulk of the volume is in the body, so it makes sense. How do you know which one is telling you the direction of the SMT? The one that makes the lowest low, or for example, the weakest one, okay, ideally the most bearish one would be the one that fails to make the higher high, because that's showing you unwillingness. Whenever I see a market unwillingness to do something, so we have S&P here on the right. Let's say I'm trading ES, okay? NASDAQ makes a higher high. S&P fails to make a higher high. S&P is more bearish. Why? Because it doesn't even have a willingness to take out the high. It's already showing weakness. So whenever you see a market like NASDAQ, unwilling to trade to this new day opening gap, that's bearish. Let's say here, like sell side, obvious low, okay, trades down, unwilling to take out sell side, trades up, creates a fair value gap, that's bullish. So as far as SMT, whichever market, if you're looking for lower prices, whichever market fails to make a higher high, that's the more heavy one, okay, because it doesn't even have the strength, it doesn't even have the willpower, it doesn't even have, okay, enough movement to get up there, and it just gets up the ghost and breaks lower. And then this is the say trade on ES that you can take right there, targeting relative equal lows. How far back you look for new day opening gap, it doesn't matter. Whatever, when I'm trading the morning session, whichever new week or new day opening gaps are in closest proximity, those are the ones I mark on my chart. It doesn't matter how far back it is, as long as there's narrative behind it. Can you review ICT opening range gap? I just posted those notes. Every single notes that ICT, or every single video that ICT has posted so far in this 2025 playlist, I shared my notes with you guys. So just look at my notes. I spent a lot of time putting those together, so definitely worth digging into. What max size stop loss would you use? The stop loss size doesn't really matter. It's the risk to reward, because you can adjust your contract size. So it doesn't matter if you have a 50-point stop. If you're targeting 100 handles, that's still a 2-to-1 risk to reward. You just have to use like 1 or 2 micros, like really low leverage. Just risk the same percentage regardless of your stop loss size, because that's going to change. All right, so here we go. We got 25 minutes. Real quick, we're going to talk about some economic calendar stuff. This is going to be real brief. Let's see. So let's pull up this upcoming week. All right. And I'm going to switch gears here. So you should be seeing the economic calendar for this week. So for starters, okay, a lot of people ask, what days don't you trade? Which days are the best to trade? Okay, what are you looking at? What do you consider as far as the economic calendar? So let's get the basic groundwork done first. General rule of thumb, okay, the day before a high-impact news driver, a major high-impact news driver like CPI, NFP, FOMC, the day before those major news events can be a low probability. Can you trade it? Yes. Will you have days where those days are just super clean? It'll be the day before CPI, or it'll be Thursday of NFP week. Can you get clean price action? Absolutely. But more times than not, okay, those days are going to be a little bit more difficult. Why? Because the market is stalling for the CPI number. So this day here, there's a reason why I'm choosing to do a free tapering stream on YouTube on the 13th. Okay, last week we traded Monday. This week I am not trading Monday. I could have easily set the calendar up to where the first Monday of the new year, or the first Monday where I'm trading, that could have been a public stream, tapering stream on YouTube, and then we come back, trade privately on the 13th, this upcoming Monday. But why didn't I do that? Well, I'm looking at the calendar here. We have CPI, high impact news on Wednesday. We also have high impact news Tuesday. Monday, what can you expect? In my opinion, not much. Why is that? Why would the market move cleanly on a Monday, okay, when we have all these news drivers that is clearly the main focus for the week? So I'm expecting a quiet Monday. PPI, I'm expecting movement. We can have a clean day. Even though it's the day before CPI, because we have a high impact news driver, I believe we can still get clean price action. But my thought process is anything after 8:30 on Wednesday, I'm expecting clean price action. I believe the market is likely to just stall around. Everybody's waiting for the CPI number. Once that hits the marketplace at 8:30, then I'm expecting clean price action. Wednesday, silver bullet, 10 a.m. Thursday, silver bullet, 10 a.m. Friday, silver bullet, 10 a.m. I'm expecting clean price action once our heavy hitting news driver is out of the way. Monday, I'm expecting to be garbage, which is why I'm just doing a tapering stream publicly for everybody, because it's a no news Monday. You already know how I feel about that. And CPI is obviously the focus. Now contrast that with last week. Here, what's the focus? NFP. Okay, this is NFP Friday. General rule of thumb, okay, if you're trading NFP week, you want to be trading Monday, Tuesday, Wednesday, and be done, okay, and not want to engage on Thursday. That's a rule of thumb. Okay, that's just why I chose to trade Monday, because NFP protocol. All right, Tuesday, clean price action. Now, if you remember Wednesday, I'm not going to go back to the chart, but Wednesday's price action, January 8th, we just reviewed it when I was talking about seek and destroy. Wednesday's price action looked disgusting. Why is that? What do we have in the PM session? FOMC. Okay, now FOMC meeting minutes isn't as bad, isn't as heavy hitting as FOMC like funds rate, but if you look at my trading plan, I have whenever we have a FOMC event in the AM session or the PM session, that morning session is likely to be trash. So on this day here, Wednesday, even though we had high impact news drivers and medium impact news drivers all in the morning session, because we have FOMC meeting minutes, okay, in the PM session, that morning session was trash. I didn't take a trade on that day. And we're getting closer to NFP Friday, and everybody's waiting for that non-farm employment change number to come out. That's the main attraction for the week. So the closer and closer you get to that main news driver, expect the price action to kind of fall off, because we're all waiting for this number. Deep pockets, institutional, large funds, they're waiting for this number. All right. So that's really it when it comes to economic calendar. If it's the day before a major news event, NFP, CPI, I'm expecting it to be low probability. I might even just not trade it. If it's the morning session of FOMC, I'm expecting it to be trash. If it's Thursday of NFP week, I'm not expecting the cleanest price action. If it's a no news Monday, I'm not expecting the cleanest price action, especially if we have CPI later in the week. Okay, the day before bank holidays can be clean, but the day after can be trash. I don't trade bank holidays, at all. So the day before bank holiday can be decent, but the day after a holiday, it's usually a little wonky. That's when you'll get like a mixed market. NASDAQ would go higher, S&P would go lower, Dow would just go sideways, dollar would just do whatever, and it could be harder to get a read on it. So that's it for the economic calendar. Quickly, so I already set the schedule out for this week, but Monday will be a tape reading stream. I will not be pressing buttons. I'm expecting a trash morning. Now, could I be wrong? Could we get the cleanest price action we've ever seen on Monday? Absolutely. That can absolutely happen. But I'm preserving capital. I'm not putting myself in harm's way. I'm sitting this Monday out, and I'm trading Tuesday through Friday. Okay, remember, the focus is all you need is one good trade a week. That's all you need. Monday's trading will go on without me. What else? I believe that's all we wanted to cover. SMT, economic calendar, and continuation stuff. That's it. So we have about 15 minutes. Let's just take a whole bunch of questions. This segment is really for you guys. Switch tabs to Trading View. And let's do this. We'll just do a bunch of technical Q&As, and we'll get up out of here and enjoy the rest of our weekend. Private mentorship group, I have 2 lectures coming out today, 2 teachings regarding order flow and things of that sort. That'll be posted later today, probably by 6 p.m. before we get our new day opening gap or new week opening gap. Standard deviations is nothing special. I don't place much weight on it. It's really just for bread and butter setups. So I took this short. Okay, one of the easiest ways you can use standard deviations. Okay, my entry is here. Whenever we're bearish, you want to take your standard deviation of a price move going higher and project it down. So this move going higher against the daily direction. I'm running fib projections from the highest high and the lowest low. Get ready to take your screenshot. Here's my fib settings for standard deviation, projections, fib projections. -1 standard deviation. That was my target shorting here, and that was my runner, and that was a nice exit. So -1 standard deviation from a measured move is a nice target. And then I also use it if we're trading near all-time highs. Like let's say, all right, let's say NASDAQ did something like, whoops. All right, let's say NASDAQ did something like this. Let's say this was NASDAQ's previous all-time high. We run out the all-time high, we trade down. Let's say I buy something here. All right, how high can NASDAQ go if we don't have any buy side, we'll have anything because we're trading at all-time highs. That's when I'll just run a fib projection. Like I'll do this low up to this high, get -1, -2, and I'll just take partials all throughout here. So that's really all. The only time I use fib projections, standard deviations, if we're trading at all-time highs or bread and butter targeting like this short, something like that. Do you care about the economic calendar? Yes, economic calendar plays a role when trading Asia. It's the same rules. If you're trading Asia Thursday of NFP week, you're probably not going to get a lot of movement. Really, Asia, if you have any high impact news drivers in the morning session, Asia is probably not going to move as well because why would it? Why would Asia move on Thursday of NFP week if we have Friday NFP coming up in 12 hours? So Asia is not likely to move the day before a high impact news driver because everybody's just going to be waiting for that report to come out. So you can expect Asia to just stall on those days. Now Asia moves really nicely when you have like NVIDIA earnings after market close, like when you have those earnings that come out after 4 o'clock. Asia will move really nice. Like it'll move cleaner and faster than the morning session on days like that. So that's something to keep in mind. Do you consider weekly power of 3? Yes. But power of 3 is just real simple. I mean, our sell side focus was down here for NASDAQ. Power of 3 is the same thing. You want to see us open, trade up, trade down, close near the low. Power of 3, open, trade up, trade down. Ideally, you want to short close to that opening price. Okay, we had a nice power of 3 on Friday. Daily candle, we open, trade up. That's a Judas swing. Take the real move going down, close near the lows. That's all power of 3 is. That's what the midnight opening price does, is power of 3. The 8:30 open is power of 3 for the morning session. I consider all of that. Do you think Asia moves better when New York is choppy? I'm not sure if there's a correlation between Asia and New York as far as clean moves. But I haven't been trading Asia, really. I've been focused on the mentorship group. Speaking of mentorship group, for those who are watching, I just sent out the weekly schedule, the one-on-one meeting times and all that. For the most part, all of you guys have the same meeting times as last week. If you want to make changes to that, just let me know. But everybody has at least one meeting scheduled for next week. Fate change in the state delivery. We're not going to talk about order blocks. Order block is, that's a whole nother, like, the order block is ICT's PD array that he's holding back the most on teaching. So I'm not even going to try to teach it. It's so much. It's too advanced to cover in the last 12 minutes of this webinar. And a lot of people place emphasis on change in the state of delivery. You don't need it. You don't need to know that. And really, a lot of people are a lot of people change the state of delivery. I see that so much. You're chopping yourself up. Because a lot of people, for one, order blocks and change in state delivery does not matter if you don't know narrative. If we're looking for daily sell side here, which we were, okay, that's our focus. I don't care about any bullish order block, any bullish change in state delivery, because what will a lot of people do? Oh, look, we have a down close candle, we have displacement, take that opening price. That's change in state delivery, right? No, completely trace through it. This is your change in state of delivery. It's actually these two up close candles. Order blocks are so advanced, like you really have to dig deep through the ICT content. But the opening price on these two down close candles or these two up close candles, that's the change in state of delivery. These two up close candles, that is one order block. This last up close candle in its opening price is also the change in state delivery, and this last up close candle in itself is one order block. these 3 down or 3 up close candles here, that's one consecutive bearish order block, and its opening price is a change in state delivery. This last up close candle here, and its opening price is a change in state delivery. But none of that matters unless you have narrative. We're looking for lower prices. So do I care about the opening price on this down close candle here? No. No, it doesn't have any relevance. Okay, it does not matter. We're in a sell program. Those down close candles are going to get ran through. Do I care about this down close candle? Down close candle, look, we've taken out sell side, down close candle, we traded up, displacement, trade down. Shouldn't we be bullish and go higher? Why would we do that? We're looking at sell side. We have a triple bottom down here. I don't care about the change in the state delivery. I don't care about this order block. It has no relevance to me. It's not important. So a lot of people get tripped up trying to focus on changing state delivery when they like narrative first. Narrative rules over everything. And then you could get cute and fancy and look at order blocks later. But in your early stages of development, you need to focus on where the market is likely to gravitate to. And then you can focus on PD arrays later. Weekly forecast, I'm looking for lower prices, but I'll post that today, probably before Sunday's open. It's pretty simple. We covered it earlier, but weekly forecast, I'm looking for sell side here. That's pretty much all I'm looking at. And this down close candle. It's order block. That's my draw going into next week. We're not far from that. We may get that on like Monday or Tuesday. If there's news at 10 a.m., oh, that's something I forgot to mention. As far as the economic calendar, 10 a.m. news is my favorite news driver. Whenever we're trading and we have 10 a.m. news, I love those days because most times, this short we've taken was before 10 o'clock, but it was just too clean. And I'm giving myself permission to trade the opening range this year. Last year, I did not trade before 10 a.m., but I feel like I'm experienced enough to be able to engage before 10 o'clock, so that's why I took the short. But this was our medium impact 10 o'clock news driver, and it was just nice. We're sitting in this short, okay, sitting a little bit of consolidation, small little drawdown. This candle traded up. We said we just want to see a wick inside of that fair value gap, nothing more. And then we get 10 a.m., medium impact news, and it was just beautiful, beautiful delivery. So 10 o'clock news drivers are my favorite. I love trading days when we have a 10 a.m. news driver. I love it. Order blocks, bread and butter setup. I used to trade order blocks because I used to trade supply and demand. So naturally, when I switched to ICT concepts, order block was my first PD array that I went for as an entry because trading supply and demand, you're just trading the last down close candle, last up close candle as a supply zone, as a demand zone. So when I saw ICT talking about order blocks, I was like, oh, this is pretty much what I've been trading already. And then you realize it's more advanced than that. So I gravitated more towards the fair value gap entry. And I'll still trade order blocks. I'll still trade breakers and all that, whatever's in the chart. Color based on previous close. It shouldn't be on. Oh, no, it's not on. It's off. Color based on previous close. It should be turned off. But sometimes, like, I had to remember to save my chart because, I don't know, it'd be turned on sometimes. Will there be more mentorship sessions? I'm thinking about just doing, like, I don't know, the mentorship, it's a lot. I enjoyed the mentorship, like the one-on-one calls, the one-on-one engagement, and just kind of, like, right now we have 10 students in the mentorship group. And I've done Zoom calls with all of them except for one. I have a meeting today scheduled around 1 o'clock. And just working with them individually. But it is a lot of work. So as far as the mentorship goes, like if you go on the WAP, if you go like the website where you go to access Discord, I took down the other sessions so you can't sign up for the mentorship anymore. What I'm thinking about doing is, so right now, and it's going to be brief and then we'll get off of this, but I've gotten questions about this a lot. Right now, the 8-week mentorship it's an 8-week mentorship program. There's about 1 or 2 lecture videos every week. The end of those lecture videos will have homework assignments. The lecture videos are around 15 to 25 minutes long, and each week covers order flow. We'll cover daily bias. We'll cover top-down analysis. We'll cover risk management, drawdown management, We'll cover basically if I was a trader coming up and I wanted the roadmap to profitability and I wanted to reach profitability in 8 weeks. Not saying you could be profitable in 8 weeks, but my mindset is if I wanted to get profitable in 8 weeks, what would I include in those 8 weeks? So all the lectures I make, all the videos within that 8-week program is geared with that in mind. And on the side of that, there's one-on-one meetings. I'm also assigning each individual person their own set of homework that's more catered towards their needs. So that's a lot of work. So what I'm going to do is I'm going to open the mentorship back up, but I'm taking the one-on-one sessions out because it does take a lot of time out of the day. The one-on-one sessions are like 30 minutes to an hour. They're about to be. So I'm going to cut the price in half. Right now, the mentorship is $1,000, but that's because it includes one-on-one meetings. I give you personalized homework assignments based on your needs. So if you're struggling, hey, Tremaine, I'm struggling with this, I'll say, okay, no problem. I want you to go into your charts. Okay, find examples of this. Here's an example of me doing it. Go into your charts to do this. Bring it back to me in a couple of days. I'm going to check it. We're going to hop on a Zoom call. We're going to back test together. Okay, we're going to build your own model from scratch, and we're going to work with you one-on-one. That's why the mentorship is priced at $1,000, because it's a lot of one-on-one engagement. But that's a lot of work. So I might open the mentorship back up later in the month, but it's probably going to be priced at like $500 something. It's going to be half the price, and all it's going to be is just all the lecture videos. So it's probably going to be close to 25 lecture videos with the homework assignments at the end. I'll throw in like 2 or 3 different models that you can trade if you don't have a model. And it'll be the mentorship, except it won't have the one-on-one meetings, the personalized approach. You won't be able to talk to me, ask me questions while you do the mentorship. I'm taking the engagement part out because of time and my time. But yeah, that's enough of that. So that's how the mentorship is going to go. So I will open it back up. It'll just be tweaked a little bit. There won't be any one-on-one sessions. But because of that, I'll reduce the price. Would you ever do one-on-one separately? I used to in the past. I used to do one-on-one sessions. It's really just the time, man. It's the time. Like, it's the time. It's just really time. And then the time zones, like some people like way in Alaska and their time zones are different. You know what I mean? Like I'm already streaming in the morning. Right after we stream, I have maybe 2 or 3 meetings with the mentorship group, and then I have to put the mentorship video lectures together, and then I have to do social media work for TikTok, Instagram, YouTube, and all that. So it's a lot of work. So I probably won't do one-on-ones anymore. But I mean, like I'm always active in the Discord 24/7. So if you ever need questions or help, I try to respond as quick as I can and help. I woke up and checked the general chat room, and there's like 3 people asking me questions. It's just funny because the more people that join the Discord, it's just so many questions. But I'm only one person. I think that's it though. We covered everything. For those who tuned in late, we covered how to correctly use SMT. We covered how to use the economic calendar, which days are the best to trade, which days do you want to be cautious on. And we also talked about when can you expect price to not revisit the midnight open. Okay, when am I comfortable selling beneath the midnight open? When am I comfortable buying above the midnight open? And what do I look for in price to give me that confidence to trade away from the midnight open? So we covered all those things today. But I think that's it. It's 10:58. We can go ahead and get off of here. 25 points on NASDAQ is all you need. That's all you need. One good trade a week. Get in, get out, call it a day. Like I only pressed the buttons twice last week, but I met my objective. We only took a trade Tuesday, and then we took a trade Friday. We didn't trade Monday. We didn't trade Wednesday. We didn't trade Thursday. I only pressed the button twice on stream, but they're both wins, and I met my weekly objective of $1,000. So less is more. And we're back live trading on Tuesday. Go get a mod. Maybe when I get a little bigger, I'll get a mod for the chat room. Maybe I'll talk some trash in the live stream tomorrow and get the chat room wild up. I'll talk about ICT not winning the Robins Cup or something. Make it interesting. I'm sure somebody will be salty in the chat room. It'll be a lot of fun. Do I look at a 2-minute chart? Yes, sometimes. All right. Love y'all, man. Mentorship group. Be on the lookout for those lecture videos later, closer to like 6 or 7 p.m. I sent out the weekly schedule for the one-on-one meetings and all that, so check the chat room for that. Everybody else, we're not in a private stream tomorrow. Okay, we have a public tape reading stream tomorrow. That will start at 9:15, I believe. I put on the monthly schedule, 9:15. And privately, full access members, we're back live trading Tuesday at 9:30. Love y'all. Be safe. Hopefully I answered a lot of your questions, and I'll see y'all tomorrow. All right? Peace.